Made.
Hi, everybody. Jack Trammell here with Audrey Trammell,
Oh,
my beautiful wife, and Guy is working next to me on his portfolio. We're back in the kitchen for some cookbook investing, and in this case, this is a husband and wife story. Audrey agreed to be a test subject for some of our recipes and cooking in the investment kitchen, and we're going to take a quick look at her portfolio. And I want to, Audrey was just telling us off screen how surprised she is and pleased by some of the things that are happening in her portfolio. So let's bring her portfolio up real quick and take a look at it. It's a pretty straightforward portfolio. She initially put a couple $1,000s into it, but she currently has almost $5,000 of equity in it. And if you look over here at these total gains, she has some things that have done really well. She owns some Kimball and their related company HNI, but she also invested in some things that Guy and I recommended to her based on recipes in our cookbook. For instance, you wouldn't have bought Marathon oil on your own, right?
right.
And so if you look at MPC on the screen we're sharing, it's done really well. 300%.
Gain 318.83%. That's huge.
Yeah, I mean, where do you find anything in the world that gets you a 318% gain? But as Guy's going to point out, part of the being in the kitchen, the importance of that is that you're going to have stocks that don't make it. And if you look on here, we were talking about HNI and whether that's something she really wants to hold. But Guy, let's go back in time to when Audrey said, "Help me. I want to follow the cookbook." And you came up with Marathon Oil. What was your thinking about that?
At that time, an analyst at Merrill Lynch recommended it. It was spun off from Marathon Petroleum, and they do the uh, refining of crude oil into gasoline and diesel fuel and jet fuel. And they also had a bunch of convenience stores. So that got spun off. And this analyst said, we think this is going to do well. And Marathon said, we're going to increase our dividends, et cetera, et cetera. And it just worked out. The question now is it won't go 300% more from here. And so, but it's maybe not done yet. And you have to decide if you want to pay taxes on that gain or whether you want to just stay put with it. But it helps diversify the portfolio because you need something unrelated to everything else.
Okay, so I have a couple of questions because I bought the gold stock on the OR based upon your recommendation. And even though today it's down 0.58, overall it's done a gain of 153.14%. So um
Now,
because it's down, should I try to buy more? Like I'm thinking about selling the HNI and buying more OR.
Well, gold has had obviously you've seen that gold has just simply gone up recently
right.
and over the last couple of years. But it's not going to keep trees don't grow to the sky, as they say. So I would just sit tight with it because they pay out a very nice dividend.
Okay.
You're getting cash from them all the time.
Okay.
And I can't think it helps diversify this small portfolio by having some gold because it's not going to ever go to zero.
Well, I'm thinking about selling my HNI, but I don't know what to buy, if I should buy outside. Where would I look to
Well,
find recommendations?
often, and Peter Lynch says this in his book, One Up on Wall Street, one of the best places to look is in the things you already own. And I would put this into Twillo
Okay.
because they seem to have turned around and are doing better.
And Twillo was another recommendation from Guy when Audrey started setting this portfolio up. I want to mention something else on your screen here. You can see that Audrey currently owns 58 shares, 58.228 shares of OR. But what's really important about that, open the screen up, is that she's been getting routine dividends that add right back into her holdings. And so this stock not only is performing well just as a stock, but it's also producing a dividend. And so this is kind of like what I would call a winner right now that you want to just sit on it. Is that right, Guy?
Absolutely. That's what I would do.
So does it say on this that the price per stock, does it show the price per stock when I initially bought it and now where it's at right now? So I'm trying to figure out the best
Yes,
way to read this.
I'll go back to the portfolio view and you'll be able to see it. So in your portfolio view, you can choose different things to add here. Right
Mm-hmm.
now, it shows you in the middle here the price you paid for it originally. So for OR, the gold, you originally paid $12.73 a share.
Mm-hmm.
It's
Mm-hmm.
currently trading for $32 a share. What it doesn't show you was what your original purchase was.
Oh,
So for um, Kimball, for example, you may have bought 10 shares originally, but due
uh-huh.
to the dividends you've been receiving, you're up to 11 shares.
Oh,
And so
okay.
part of the beauty of dividends is that they not only you not only have the benefit of the value of the stock itself, but some dividend paying stocks just keep on giving.
So how do I
Yep.
know which ones pay dividends?
That's part of the research. That's part of the cookbook. That's part of the
Okay.
recipe. Is when you look to buy a stock, one of the things you want to do is check its record on paying dividends or if it even pays dividends.
So to click on that little arrow next to the symbol opens it up and shows you all your purchases.
Mm-hmm.
So you can see the
So
dividends
the
right
at
there.
the if you go to
Mm-hmm.
the very bottom, you'll see where you started. I cannot see from the angle I'm sitting in.
Oh, back in 2021, it was 4 years ago. So you've been getting dividends for quite some time. And you're actually a poster child for Guy and I because you sometimes don't open your portfolio up for a few months at a time. And part of what Guy and I recommend is not over micromanaging things. You have
Right.
to let the market work its magic because it's set up to be a slow climb uphill to higher gains, but it's a lot of dips and peaks and valleys along the way.
Okay, here's my next question. As I'm looking at what I initially paid for all of my stocks, the total value was $2,250.20. And now my stocks, can you scroll back down?
Oops.
And now they're valued at $4,841.81. So if I'm going to take money out and sell, should I sell back to that, like just subtract the difference and continue and kind of look at that as my gain? And that if I wanted to cash out stocks, I could take that gain without losing my base investment. Does that make
Well,
sense?
I'll let Guy answer this too, but my initial thought is if you need money, part of why we're having people do these portfolios is so when you do need money, it's supposed to be there for you to draw on when you need to for life circumstances. But right now with OR, the gold stock, you have 58 shares and you've gained 153% gain on it. If you had to get cash, you could sell half of those shares and you still would have more of your remaining investment than you initially put in.
But the half that you do sell, the gain on that, the 100% gain on those shares, you will have to declare in your taxes.
I see. I see.
It won't, you're not in a high tax bracket. It's not a big deal.
Right. That's really my question is, I choose these stocks based upon your recommendation and upon and sometimes just what they call affinity stocks, right? Which is just I have a Kimball piano, so that's why I invested in Kimball. And
Well, you did okay on that, but Guy and I are not fans of affinity stocks, and
right.
we'll talk about that in an upcoming podcast. But for today, I just wanted people to see how pleased you were with the results
Yeah.
looking at it.
Yeah.
Um, and so, uh, do you recommend getting this book and reading it?
Yes, it's been very helpful to me. I still have so much to learn. I still have so many questions, and I don't really follow, like this is the first time I've opened my portfolio in probably 6 to 8 weeks. And
And
it's very exciting to see the growth. Um,
you were pleasantly surprised.
yes, but at the same time, I'm inadvertently following the principles of just leave it alone. And it will, I mean, because the idea is it will gradually continue to grow over time, dips and peaks and valleys aside, correct?
Mhm.
Okay.
All right. Well, we're going to have more sessions with Audrey. She is one of our um, early proponents of trying the system out, the cookbook system. So,
And as you all can tell, I really don't know a whole lot about investing. I'm learning as I go. I just am really excited to see the growth,
and you're doing a great
and
job.
I'm definitely following your advice, both
Oh,
you and Guy.
well, thank you, Guy. Guy's off
And
screen here. He's looking at his own portfolio while we're talking about Audrey's. And so we'll be back with more in the kitchen with our next podcast. So, see you
all
soon.
right, bye.